a buying opportunity. They have their reasons. And at the end of the day, at the end of the week, at the end of the month, both can end up profitable. So both can end up profitable depending on their consistency and getting their setups right. So for us here, one of the things you need to understand is you want to trade, you want to have a system, just like we learned yesterday about system. You have to create a trading system, because your system will determine your what? Your system will determine your what? Your result, your outcome. So you have to create a system for yourself. And using the system we have built here, the system is that I want to look for key zones where I will want price to come to and then do what I want it to do. Then I follow the system. Do you understand what I'm saying now? Price comes to your zone, is doing what you want it to do. Then you plug in. That's a system. If the price is not doing what you want it to do, then your system is not yet complete. The structure of your system is not yet complete. The price has to do what you want it to do. Okay, I've marked my key zone. Price must drop there. When price drops there, this is what I want to see. As long as it has not perfected what I want to see, I am not going to trade. But the moment it does what I want it to do, then I will go into the trade. That's a system. And if throughout the day, the market did not do what you want it to do, then you wait till the next day. So don't force trade. And don't focus just on one asset alone. Try other ones. If commodity is not giving you what you want, move to indices. If indices is not giving you what you want, move to currency pairs. If currency pairs is not giving you what you want, move to crypto or stocks. And I was trying to fine-tune some systems for us that you can always be looking out for. And what are those systems that we can build? So you can now begin to interchange and begin to switch and say, okay, I would like to work with this. I would like to work with this. This is what I want to look for in the market. This is what I want to see in the market. Okay, so now the first thing is you get your key zone. All right. When you get your key zone, when you get your key zone, are we following? Then you are saying, I want price to get to my key zone, and I want to see a rejection in my key zone. First rejection, and then a second rejection. That's a system. First rejection, second rejection, then I come in. After the first rejection, if market did not return back to do a second rejection, it's not my system, I will leave it. So let's say price gets in there and then it start going. No problem. It didn't do what I wanted to do. But what I want is, I want a first rejection, I want a second one. Then after the second rejection, I enter. Then I allow price to ride. Do you understand what we did here? So what we are doing here is that you are double checking your trade. You mark your key zone, price is dropping, it drops into your key zone. And then it's reacting. It got rejected, bounce back, Then you are saying, I still want it to come there again. I reject. Then I find my entry. I put my stop loss below. Then I allow price to just ride. That's a system. So if price did not do this, you are saying I allow it to go, even if it's eventually bounce back. We are going to look for examples of something like this because you will see it. Out of 5 trades, you will see 1 or 2 doing this. It's possible to always have a setup that we hardly fail. All right? Do you understand what I'm saying? It's possible to have a setup that will hardly fail. Just let me pause that in. So another system you can also build. You mark your key zone. The key zone is very important. At least mark like 2 to 3 key zone for that day. Then you are saying, I'm waiting for price to come into that key zone and is doing a breakout. It will break out of my key zone and then immediately return. Yes, it returned back. So it breaks the key zone, it returns. Then I am entering immediately after it returns. Now, these breakouts, first breakout, is where your head sell will be. Now, what this breakout means is that the market makers, all right, the market makers are assuming that there will be a lot of orders here, a lot of sell stop, a lot of buy limits. That means people are waiting for price to get to this area and then they will buy. Then people are also waiting for price to break this zone, and then they will sell. So what it has done is that it's coming here to activate those who entered buy, and then he stopped them out. Then he activates those who pick sell, and then he stopped them out. And then still respects the key zone and start reversing. That's another system that you can work with. So it's about building something that the market will always present to you, and then you ride with it. Do we get it? Something that the market will always present to you, and then we ride with it. Let's look at some examples. So you will see markets doing either of the two. Anytime, any day. A liquidity sweep or a rejection of a key zone, and then a retest of that key zone. A rejection from that key zone, and then a retest. You always see something like this. Or it comes, sweep it out, then go back. So let's look at a few examples, if we can see. So the first thing is we are marking our key zone. Let's look away from gold. So we look for something else. How can I be having CHF as next pair? Okay. Look at this Nasdaq now. I don't know when this key zone was marked. So let's say price has not played out like this. So you are marking this area as your key zone. So let's say this has not played out. So you mark this area already here. And now look at what price did. Price came to that key zone, and you are saying, I want a retest. So when price tested the key zone and rejected, it will look like it's not coming back to test it again. But because you have built that system that I must always wait for a retest before I come in. So it came, it did as if it didn't come for your retest. And then look at what price did. It came into that zone again. So what we are saying is at this second testing, you find your entry in your microstructure. Find your entry somewhere here. Your stop loss is here. The truth is, if it breaks this place this time around, it will go. Whoa. So you find your entry here. You put your stop loss here, and you allow price to collapse. Price will always do what you want it to do. Okay, often, let me use the word often, not always. Price will often, not all the time. The reason why the system is important is to filter trade for yourself and have a more solid setup. The process is much more important than the profit. The process is more important than the profit. Let's find another one. Okay, going back to that one, let's go to a micro time frame and see where we'll have entered that trade. Okay, so now look at it here. Look at it here. So when price came in, let's even say you were not there when this happened. You just saw, you have marked those key zones. You just saw this thing happening here. What you are saying is, okay, I want price to come back to my key zone. And then you wait for a few hours. I think this should have taken almost a full day. And then we see price returning back there on a lower time frame. And the moment it retested that same key zone, then it starts coming down. It's telling you that it's respecting this area. So you find your entry maybe after 2 of this candlestick, and then your stop loss will be above this one, not this one. Not this one, above this one. And then look at the way the market collapsed. Let's look for another one and see. Is it looking complex? Is it looking complex? Okay, now, what I will advise you should do is give it a trial for a few weeks. If it's not working out, that means you are not understanding it. You pick trade, is hitting stop loss, then it's not your thing. Leave it. But outrightly saying no, you can't do it. You have defeated yourself. So don't you have yes. Outrightly saying, yeah, no, this thing is not so. That's already is you have defeated yourself. It's a self-defeat thought. Okay, so look at this one too. You mark your key zone after you saw these 2 rejection. Price has gone. You mark this key zone. And then you are saying, okay, I want to see what is going to happen in the next future. And then suddenly price came in here. The first time you say, I want a retest our structure or your system. Price went back. Now did as if it's breaking out. Did as if it's breaking out. But suddenly, the next candlestick started coming here, started returning here. You can actually find your trade somewhere here. Your stop loss below here. And then you have, I think from here to here, you can still get 1.9 or 2% by calculation. One thing is this, you must take notes. If your reward, like we mentioned last week, if your reward is no more, leave the trade. Yes, if the reward is no more, at least 2%, leave the trade. If the reward is no more, leave the trade. Look for something else. But if the reward is more, then it is worth trying it. Now, look at what gold is doing now. We mark this key zone. And remember that when there is a breakout of a key zone, it means that it's no more selling. And I think this zone is a major price. I've been there for a long time. Right now, gold is bullish. Right now, gold is bullish. So if you are going to follow your system to trade this gold now, what you will be saying is, okay, now there's a breakout. I'm moving to a lower time frame. Price has pulled back, but it didn't really enter into that zone. So what am I supposed to do? Price didn't really enter into that zone very well. So how do I approach this trade? Two things that you can do here. First one, you wait. Wait. Allow price to come into your zone. With this, you are not even using other tools like moving average. You just allow price to come into your zone. Then behave, it does any of this behavior. Number two, you allow price to break this area very well. This area, that's lower high. I allow price to break this lower high and then do the same thing here. Break up, return back there. All right. Thank you. I allow price to break it. Then give me what I'm always looking for. But in case we miss here, it doesn't return here. I'm going to allow it break this low high. And let it start doing higher high, higher low. Yes, sir. Okay, for yes, this is going to be TP1, but there's a higher level up there. If gold start buying, I expect gold to get to this level before it starts this level. This is the next target. Yes, sir. One time frame. For what? Times for analysis or for entry or for everything? For both? Yes, you can. Yes, because higher time frame is more clearer. That's why we usually use it to mark our key zone. But lower time frame help you to enter earlier. Do you understand? Lower time frame helps you to enter earlier. So you can actually use both for your analysis. But it's better you come to the higher time frame, just one. You can stick to just one, either 4 hours or 1 hour. Mark your key zone there, and then you say, I want price to come to my area. Then you move to a lower time frame and use the lower time frame to enter the market. So if you are on 1 hour, all right, and let's say on 15 minutes, let's say time is 2 o'clock, Price has entered your key zone in 2 o'clock. And the next candlestick in 15 minutes is going to be 2:15. That candlestick has already shown you a sign that you can come in. You won't have to wait 2 o'clock. Because 2 o'clock, candlestick can higher. And you will now be having what they call late entry. When you enter, it might be the time price is pulling back at the higher time frame. It might be when price is pulling back, so you'll be having drawdown, and then your stop loss will be wide. And if you need precision, so use higher time frame for your setup. Use lower time frame for your entry. Use higher time frame for your setup. Use lower time frame for your entry. So we can say for gold, let's wait. Let it come back. Or let it break where it is correctly and come back to retest that area to form that lower low, higher low. Because it's not advisable to always buy at high. There is not advisable to sell at low. Let's say some people, when they saw this candlestick now, they pull sell. Can you see what price has done? They sold at low. Price has pulled back. Even if eventually it will sell, maybe it has hit their stop loss or they had a very terrible drawdown. Yeah, they will put their stop loss somewhere here. If trade will eat your stop loss, let it eat it honorably. That it is your setup that failed, not because you enter out of impulse. He's selling, let me enter. Don't do impulsive trading. Don't do impulsive trading. Let price obey your system. Let price obey your system. Any other question? So our assignment today is that you must pick a trade today. Yeah, I'll come to come and check all your trades. You must pick a trade today. Whether the trade is running on profit or it has its stop loss, I want to see your trade. So do an analysis, analyze markets, any one, and then pick a trade. Yes, sir. Okay. Trailing stop loss. Trailing stop. Trailing stop. Yeah, trailing stop is like you have a trade. Let's say you have a sell. All right. Let's say you have a sell here. The head stop loss is above it. Now, when the trade starts going in profits, you are now moving your stop loss. You move it into your entry. After the entry, all right, you move it. For example, you move it below. If it is sell, you move it below your entry. If price returns to that entry, it will close your trade on a zero. They call it break even. Zero or maybe little cents of profit. That means you are trading at zero risk. The moment trade enters your profit and you set break even, you have to put that trade on a zero risk trade. But if price returns there, All the profit you have made before is gone, but your capital remains. That's one way. Another way is that you don't have TP. You want to make that stop loss your TP. So the moment you move it to your entry, as price is moving deeper, you are moving the stop loss. As it's going deeper, you are moving the stop loss. As if you are using the stop loss to follow the price. Yeah, yes, it will be on profit. So let's look at this. Let's say this is the sell that has happened. You place trade here, you put your stop loss here. Let's say here. Now, TP, let's say TP, you are saying TP should be here. Now, this stop loss, you now move it into your entry. Oh, this one is not doing what I want. You now move that stop loss into your entry. If price returns to that place, it will close the trade on 0. But let's say the price keep going down and you keep moving this stop. You keep shifting it towards the price. Towards the price. Anticipating that it will keep going. But the moment it returns and gets where that your trailing stop, it's no longer stop loss. It's now called a trailing stop. So the moment it gets there and hits that trailing stop, the trade will close on that profit at the point where it met it. So let's say it got somewhere here. The profit is at 500. The trailing stop is here at 300. If it gets here, we close the trade for you on 300. Yes, or you have a TP, but the TP is far away, but you don't want to end that trade in a 0. All right, so you keep moving the trailing stop. You can automatically set it. Oh, yes, on MT5. They will be moving it for you at point. You can put 10 points. That means if price move 10 points, it will go 10 points. If it moves 20 points, it moves another 10 points. It keeps moving. But if it returns, it won't return. It will stay where it is. If it goes again, it keep coming. Yes. Yes, it follows it. That's how they use that trailing stop. But you better enjoy it, not on lower time frame. You better enjoy it on a higher time frame. Because lower time frame makes a lot of noise. Price can quickly return to your entry and come back. So you'll have wasted that trade. But on a higher time frame, it might have gone far, then you move it. Even if it's going to do a pullback, it will not return to your entry, just do a pullback and then continue. Samson wants to be protecting his capital. It start coming back to your way. To coming back against you as if you want to come and that's why it's good to trade the trend. You will be afraid when you are trading against the trend. When that's beginning of continuation. You are trading with the trend. That you should expect a pullback. Don't expect price to keep collapsing. Yes. Yes, that's the panic. You are panicking at the pullback. You are thinking that if it pulls back, it will go back to my entry. I've wasted this trade. Goodbye is about to continue. So it's just to wait for confirmation and then find your entry. The candlestick, the buying candlestick now that is forming is healthy. The candlesticks are very healthy compared to the selling candlestick. Those ones are coming with wicks, but is coming with full body. Those are some of other signs. So by the end of today, you analyze a trade and pick a trade. Analyze a trade and pick a trade. So just go around all the assets and look for a fine setup that fits into your system. Look for a very fine setup that fits into your system and then execute it. I don't like trade like this. Once trades start ranging, it doesn't give you this Bitcoin is selling. So in this situation of Bitcoin now, just be looking for sell. So if you are going to find your sell, allow price to come back to this area. Allow price to come back to that area. Then you sell further. So you can decide to mark your key zone here. You can decide to move it here. You can decide to make it like this. People have their way of marking their key zone. All right. So you can mark your own key zone like this, or you can make your own as big as mine. So I wait for price to pull back into this area, then we sell further. That's how, if you are going to trade Bitcoin now, that's how you find yourself. I don't really know why Bitcoin is selling. I don't know. I don't trade it. I don't like it. But since it's going in a sell direction, maybe it's something somebody can consider. Now look at what happened previously. See, I think we marked this zone before. Look at how price. So you have marked this key zone. Price didn't get there. You have missed this particular trade. All right, it's a good miss. Don't say, I didn't get to my place. Maybe next time I will make my key zone more wider. No. Don't trade that way. Don't trade that way. Let trade always 1 or 2 out of 5 trade. We do what you want. Don't forget that everything you are seeing here is human behavior. So it will not always happen the way you want it. This is where many traders make mistakes and they run into losses. There is no guarantee. Anyone who is explaining trading and is using the word guarantee, assurance, I am very sure there's nothing like that in trading. Price pulled back, quite all right, but it didn't get to your area. So something happened here that make it quickly collapse. You look for another trade. Obani, Obaje. Another trade. Money saved is money earned. Don't train yourself to become an impulsive trader. Don't train yourself to be an impulsive trader. Wait for price to come to your area. See our new area here. I want price to come there. Retest it. Do equal lower high, equal high here, and then I take it further. Sincerely speaking, if trade come here today or tomorrow, I will pick this trade. I don't like Bitcoin, but I will trade this one. Okay, I think we anticipated buy here. You see, it came to that area, rejected, but it couldn't go as far as we wanted it. But if you are in this trade, your trade is still secured. It has not hit your stop loss. Do you understand? We predicted that it will come back to this zone, and it came back. It's still coming back. It's going up again. So right now, that setup that you just close the trade on maybe half profits because it's now choppy. It didn't do as we wanted it, but it didn't hit your stop loss. Key zones are very important. This S&P 500. Okay, we anticipated that price will come to that zone. Price didn't come to the zone. Rather, it got halfway and returned. So we still wait for the day price will come back here. So when you mark your key zone, if it doesn't happen that day, the second day, leave it there. Leave it there. It's still valid. The price didn't come there doesn't mean that it has been invalidated. Leave it there. Euro USD. Sorry, Euro GBP. I don't like this spear. I don't used to understand it. Sincerely speaking. I used to avoid it because the spread too is not so good. So I don't know what is going to here. Maybe it's going to break and go higher because of the trend it's doing. Probably it's going to break it and go higher. Okay, look at this, our trade too. Okay, it didn't come back there. Okay, but our key zone is still valid. So let's leave it and watch price return there. So you have options. You have options. In a week, you should be able to trade like 3 to 4 times. Does it look like we can buy this? Does it look like we can buy this? We should check. Okay, we should check moving average. All right. That's a good one. I like that. Okay, so we have introduced moving average. 20, 50, 20 is blue, 50 is yellow, 100 is black, 200 is red. So with the moving average, okay, with what price is now, what do you think we should do right now? Don't just say, what do you think we should do if we want to trade this asset? Okay. Okay. Okay, so what should we do now? We can wait for price to return back here and buy. It can do it. Wait for price to return back here and buy. Because it's already telling us bullish a little bit. You see it? So wait for price to return here and then we buy. Which one? Okay, you want it to come back there and come back there like 2 times. It was done 1, 2 already now. 1, 2. So now we missed the entry. So we are not expecting to come back, but if it comes back into that key zone, maybe with extra moving average confirmation, we can return back. But right now, it's too late to buy. Too late to buy. GBP USD. What's our trading idea? What's our trading idea? OJ, what's your trading idea? Forget about this candlestick you are seeing. Look at the structure. Don't quickly start looking at candlestick. Look at the structure. Look at structure. Look at structure. So, OJ, what are you going to do? GBP USD. Where? Right now? Not right now. So where will you sell? Are you going to add another key zone there? Are you going to add another key zone there? Oh, yeah, now. I'm asking OJ. Yes, baby. How are you? Do you want to put this into consideration? Don't just think it, say it. Let everybody say, no, you are not correct or you are right. Are we going to put this into consideration? Where? Okay, so we are putting that area into consideration. Price is doing something in this area, in this market is doing something around this price area. Rejection, 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 reacting. So what do you want to do? Buy or sell? What do you want to do? Buy or sell? Samuel, what do you want to do? Or you want to say in average? Of which zone? I should put in a lower time frame. Okay. 5 minutes or 15 minutes. Or I should increase the candlestick. Sir? Okay. So what do you want to do? Okay. What Samuel said is still not bad. He said, okay, I'm going to wait for it to come back here again. So if it doesn't come back there, what else are you going to do? Or do you want to buy? Are you also putting this into consideration? Or what is your idea about this? Or this doesn't mean this is what I'm looking at? Bearish trend, okay. Mm, mm. It's not safe. Okay, yes, fantastic. Buying from this area is not safe. Okay. So your idea will now be, I want you to come back here.
Buy.
No, okay, you want to buy?
Buy.
Mm.
I do want to buy with it.
Okay.
Break this.
No. You want it to come back here. To come back. You want it to come back here. Right? You want price to, you are saying you want price to come back here. If it's retesting this zone, you want to buy now. If you are saying that I want you to break this zone now, I want to sell. You can't say I want you to retest this zone. If you are going to sell and you say if price returns here and reject again, I will sell, it conforms with our pattern of trading. But if you say I want you to go back here and return here, you have wasted moves. Do you understand what I'm saying? So you can't say you want it to retest here and say, what if it retest here and return? But if you are saying that, okay, I want it to come back here the third time before I sell, maybe you may be right. But already, you see, this rejection is already telling us that this guy might likely sell. So who is going to give a better idea of how to sell this if you want to sell? Yes, Emmanuel.
That's giving us a retracement whereby it gives us something like an M. At this point, it has already entered back our zone, and this is like the perfect time to buy. If some people want to they can still buy, but if you buy from this zone to that other zone, that's what I see there.
You are saying that
Yeah.
buy from here
Yes.
because
Because we're already having a bullish trend.
okay, because of this
Bullish trend. That was
here.
Sir, can we see? Can I see like a brother? Can I see it like? Okay. 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 Okay.
If you remember, look at this area.
Yes, sir.
Now, if I want to go back to this area, now later price came that area. Price is returning back there. I know the price is something that look like you want to break it with that bullish candlestick. Mm.
If you know that trying to take it down. Say that sellers are trying to like.
Okay.
But at the point of that,
You see, it out. So the trading idea is that if you test it, and then we find our path. Let's say that we test them. All right, that's we tested. We now find
Buy.
that one we are not here. So let's say we are here, maybe we now find buy here and bought here. Our stop loss is somewhere here. You understand?
Okay, sir.
Our stop loss is
Somewhere here.
Now it's went up and started rejecting at this place. So at this point, to trade safer, you have to wait for 2 days. Because price can now decide to collapse. Here is rejecting. At this point, price can decide to collapse. Looking at a long trend. So you wait for 2 things. Number one, wait for price to break, retest, and then you see. Or wait for price to return back here, as Samuel said. Reject again. And then
because I already fixed the trade on this.
Going to buy the best place to consider buy. This price returns you. Price return you. And reject again. Then you can talk. Or you can buy.
I picked the buy here already. I entered at this point.
Okay, let's hear gospel.
Basically, so I think one of the things we need to put in consideration is to calculate our risk to reward ratio. So if we are saying we are going to buy from here to here, this is 1.35 up to this place is around 70 pips. So and if I remove this out up to this place, then from here to here is around 40 pips. So I can say for an instance, breaking this high makes it a better confirmation to buy. Because basically, price came here, broke it, had a little bit of range, retested, went down. So, and we are having a very strong bullish candle. The only time I'll be more considerate to sell this market is when we get lower than this bullish candle. That is, this bullish candle now serves as a very, very key, important candlestick here. So if once we break this high, because price broke out, then we are seeing the same range, which we can also see a range retest. So a range, then break out, then we can buy from here up to here. So around here is 50 pips. So I can buy from here, have my stop loss here, which is like 20 pips. So that's like 1 to 2. Looking at this, so it's still a better option to buy here than as if you break this. So that is also invalidating this bullish candlestick. So you can now look for a sell when we test this zone, then we sell. So either of the two. I want to ask
Okay. You want to ask or add?
Because there are things involved. Because you always tell me before, don't think that you buy, I think put buy and
Okay.
or it's because right now this is a ranging market. See higher, see equal highs, two equal lows. We are ranging. So now doesn't have a direct. If you break here, the market can decide to be the big breakout, then overall, overall, currently now, it can overall it's but because of this movement, it can be.
Okay, so where are we buying? Where are we buying from? What are you saying?
Where they are thinking about if they break this high, it can give us extra like that is really
Uh-huh.
they break this high, it's confirming that okay, we can take it by, but if we are picking back from here, market can decide to come down like that.
It's the same thing we are saying now. It's the same thing we are saying. We are saying that you come back here. Me, I will be on the sell side more than buying. And if I want to sell, I allow price to break here, retest and sell. Or price returns here, fail again, and then I sell. If we are going to consider buying, price returns here, all right, fail to break below, reject again with a very strong candlestick, then we can buy. Or a break above this level, then we buy. However, what is more important is consider your risk against your reward. If what you are risking, if what you are going to reward, you are going to get as a reward is not bigger than what you are risking, then even if the trade is good, you should avoid it. Do you understand? If the reward is not good enough as against the risk, consider avoiding that trade. But for this one, I will go for sale. Now, can you see what has happened now? What has happened here has proven that every trader's bias is always different. When you are buying, somebody is selling, and both can still win. That's why I was saying on Friday that you pick buy. Where you are buying from, I will pick sell. Where you are selling from, I will pick buy. For the next 10 trade, I will still be profitable. I will still be profitable. All I just need to do is to widen my reward. You can't have 10 straight winning trade. Maybe your failed trade might give me all the profit I need. So where you are trading from, somebody is counter trading. You must understand that fact. But it is important to calculate your risk reward ratio and then trade at a zone. Understand why you are doing what you are doing. Those who bought here now, they are already having panic that this setup might fail. Because after this breakout, they will wait for a retest. After the retest, they are finding their entry. Let's say they have entered. So right now, let's say even their stop loss is somewhere here. Right now, trade is going towards, they are in a drawdown. So that's how it is. So let's end for today so that we can prepare the hall for the workshop that is coming up. Final question, anyone? Yes.
This demo account now, I want to pick a trade in this sell or buy.
Stop loss, yes.
I'm supposed to take the amount price I'm using to buy or sell out for the balance.
Yes.
To sell or buy, and you think to pay one place. I'm not holding it that. Or is it like that?
And that's how it should be now. If you have 5,000 in your account and you pick a trade, let's say lot size 1, all right, you pick, let's say, a sell, and the trade is going in your direction, your account balance will still be 5,000, but there's what they call equity. The equity will be the one going up and down. The equity will be 5,000 and something. When the price retraces, the equity will reduce. It is until trade has been fully executed that everything will now show on your capital, on your balance. If the trade hits your stop loss, that is when they will remove from your balance. If the trade hits your stop loss, that is when they will add it to your balance. But when the trade is still floating, it will be on equity. It will be going up and down, 5,300, then it can move back to 5,200. When the trade has been fully executed, that's when it will now show in your total balance. Do you understand? So that's that. As long as that's why it is not this. You know, if it is Bet Ninja that you are doing, the money, you have to remove the money from the beginning. They have taken away your money from the beginning. Do you understand what I'm saying? That's where you see where gamble is. They are interested in your money. They remove your money, and risk-reward ratio in gambling is not the same thing as risk-reward ratio in trading. Risk-reward ratio in gambling, if you have $5,000 and you are staking 1,000, the 1,000 has left your account. What is left is 4,000. So even if the reward of that whatever you are staking is 2, they will give you 2,000. By the time you bring back the 2,000 to your 4,000, what you have is 6,000. But in trading, it's not like that. If your reward is 2,000, your 5,000 remains. It doesn't leave your account. If your reward is 2,000, they will add 2,000 to 5,000, which is 7,000.
And you make more.
Do you understand what I'm saying? So this is not gambling. I watched one interview some weeks back where somebody is trying to defend that trading is gambling because he's a gambler. So he's trying to defend gambling. Now, what about those who are trading? Are they not gambling too? In all ramifications, they are not the same. But in trading, you can decide to gamble with your money. How? You don't analyze trade. You just jump into trade. You over leverage. You go in, all in. That's gambling. So if you are still doing sporty, repent. Repent. It's not worth it. It's not worth it.